Hey everyone, Chris Lopez here, and I'm a realtor with Your Castle Real Estate, and I'm recording this to give you an update as to what's going on in the Denver metro real estate market. So I know most of you will be listening to this on the podcast channel, and I'll be doing my best to describe the graphs I'm talking about and some figures that I'm showing. Now, if you want to copy these slides, just shoot me an email, chris@denverinvestmentrealestate.com. I'll be happy to send you the slides. I'll also put my email address and a link to a YouTube video with these slides as well in the show notes. So getting on, we actually have got some interesting data to talk about in the Denver market. So I'm actually reading stats from the latest market update from RE Colorado, which is the local MLS for the Denver metro area. So every month they publish a really just nice, concise set of stats talking about what happened in the previous month market-wise. And they also give you stats for the year before as well. So the stats I'm talking about now are for October 2018. I've also got the stats for October 2017 as well. And I actually really like comparing those stats because you can see what happened from the last year. We can also compare market stats for month to month because there is seasonality in our market. Buying or selling real estate in October is very different than buying and selling real estate in April. The market's slower now. The market's in full swing in the springtime. So it takes into account some of that seasonality as well. So I'll read through a couple of numbers that really stood out to me that I found interesting, and then we'll also jump into some more details of those as we go out through this presentation. So the number of active listings, the total active listings in this previous October was just over 8,500. Now in October 2017, we had about 6,300 active listings. So we went from 6,300 to about 8,500 listings. Now, if you do percent change, that's almost a 35% change from October 2017 to October 2018. So it's a big percentage difference there when we compare it. Now, I've talked to a few people that have been through some full market cycles trying to figure out, okay, why, this big jump here, is that a sign of anything? Is it an indicator? What does that mean? And of course, most people, they said, I have no idea. I don't have a crystal ball. But a couple people pointed out that every time there's an election, the market seems to slow down a little bit more around election time. So I wanted to go back to 2016 or October 2016, we had the last election and pull those stats. So in October 2016, we had 8,000 active listings, comparing that to 6,300 last year and 8,500 recently. So 2 years ago, those active listings were actually a lot closer to what we're looking at now. Now, someone said, this is, I think, their best guess is that, hey, when you just get inundated with all those political ads, no matter what party you're with or what candidate you're with, it's always, hey, if you don't vote for me, the world is going to end. You've got to vote for me. So I don't know if it actually has an impact on people's buying habits, but some people I really respect said, you know what, it's pretty common to see the market slow down a little bit more than normal once the election year comes out. So, of course, we could be totally wrong, but those are the stats for the last 3 years. The other number I want to talk about across the last 3 years are days on market. So this past October, we had 30 days on market. In October 2017, we had 27 days on market. So from the previous October to this October, it was actually an 11% increase. Now going back to October 2016, we had 26 days on market. So the total days on market 2 years ago was actually less than it was in 2017 and 2018 for October, while the total number of active listings were 8,500 this October, 6,300 last October, and 8,000 the previous October. So keep those two numbers in mind the best you can, because I'm going to go through a couple more pieces of data to put those numbers into a bigger picture context to give you some more data. And before we jump into here, I pulled up the slide that actually shows the inventory of homes over the last decade or so compared to the average number of homes actually sold around Denver Metro. And if you guys have seen Charles's or mine presentation before, you have definitely seen this slide. It's actually one of my favorite slides because it's so interesting in what it talks about. And this goes back all the way to January 2007. So this was, the market was just, the world was ending, the market was bad back then, all the way up to present day to about second quarter of this year. Now, back then, we were close to 30-some thousand homes on active inventory for the market back then. But the interesting thing is, as the population has grown the last decade and the market has gotten better the last decade, the total number of homes have actually stayed about the same. It usually hovers right around about 5,000 homes sold every single month around Denver. So whether there were 30-some thousand homes in the market and a couple 100,000 less people living here in Denver, we usually sold between 4,000 to 5,000 homes per month. Now jump forward a decade, and if you guys can see the graph here, the inventory has gotten really close to total number of homes sold, but even though we have way less inventory and more people living in the Denver metro area, the total number of homes have stayed right around about 5,000 or so per month. So keep that in mind, that even as the market has changed and the population has changed and interest rates have changed, the total number of homes sold has hovered pretty consistently the last decade. So moving on to the next slide, this slide actually shows the average days on market for a property to go under contract. So the graph goes all the way back to about the early 1970s and then plots the data all the way to, very recent in the last year or so. So back in the 80s, when it was high interest rates and it was in a recession, the average days on market bounced between about 80 days on market to sometimes over 100 days on market. Again, those were double-digit interest rate times, so it was, interest rates were really, really high back then. Then you move into the 90s when it was a seller's market, and it averaged about 50 days on market back in the 90s, and that really bounced around between like 40 to 60 days on market during the 90s decade, and an average about 50 days on market. And then this past recession back in 2006, 2007, 2008 timeframe, the average days on market were actually over 100 days on market. And then this recent seller's market, so the last 3 or 4 years that we've been in, the average days on market have been 25 days on market. So I knew I threw a lot of days on market numbers at you there, but I wanted to give you that to kind of give you that context as to what's happened the last 30, 40 years in the Denver market. Now, if you take the last 40 or so years and average it all out, the average is around 70 days on market. So during a recession, it's typical to see 80, 90, 100 days on market. And then during this recent seller's market, we've been around 25 days on market. So even though we went from 25 days on market this past October, and now we're at 30 days on market for this most recent October, if you take a step back and look at the big picture of things, it's still historically low days on market. I'm looking at the chart now from 1971 to 2017. There is nothing that's below 30 days on market until these last couple of years. So even though days on market went up 11% from last October, this October, it's still historically low days on market. So while it's jumped up, realize in the big picture, it's still really, really low, and it's still a seller's market. So this next slide we're looking at is actually internal data that Your Castle collects for all the listings that its own agents have. And they actually track the number of showings per listing. And they've done this since 2010, which was recession time frame. So 2010, 2012 time frame was the most recent data we have in this chart. And it's showing number of showings per listings. So between 2010 and 2012, it really bounced around on average between like the low of about 4 or 5 showings per listings up to maybe about 12 or 13 on the high side. And it actually stayed pretty consistent throughout the year. I mean, definitely slowed down a little bit in the summer and fall time, but not the dramatic seasonality we've been seeing the last couple of years. Now, if you go back to the recent, crazy sellers market since 2014, 2015 to present, what's been going on during the springtime, which is the hottest part of the market, we're usually between, 18 to 25 showings per listing. And then once you start hitting June, July, the number of showings per listings starts softening a little bit. They start lessening, and they're usually around 12 to 15 showings per listing. And then coming back in the fall, they usually stay between like 10 and 15 showings per listing. And that's just normal seasonality. Now, a really interesting thing for 2018 is that it looked pretty similar in the springtime. And then come July and August, where the last couple of years have been around 15 showings per listing, we had unusually higher showings per listings we've had the last few years, where it's been 18 to 20 showings per listings those last couple of months. And then transitioning from August to September, if you look at the graph, it's about as close to just falling off a cliff as you can imagine. It's going from about 18 showings per listings down to about 8 showings per listing, so 18 to 8. And September, October, they're right around that 8 or 9 showings per listings. Now, the interesting thing about this is that where we currently are showings per listing is actually between the 2010 showings per listing and the 2012 showings per listing. So it's actually in that recessionary showings per listing time frame. It's dropped off that much. Now, we have no idea what's going to happen, come the springtime, but if you look at the previous history, it'll probably pick up back up to these more higher showings per listings, but we don't know. So if you're a flipper out there and you're wondering why you're not getting a whole lot of traffic to your open houses and to your listings, you're not the only person sweating it out there. Or if you're selling your property or if you're listing something, everyone's kind of in the same boat where just showings are dramatically down. So my takeaways from this is that if you're a seller or a flipper, you really need to make sure you price your house correctly to get people in the door to come look at it. Now, if you're a buyer, this is a really good sign as a buyer because there's less people out there looking at properties and hunting for properties. And even though there isn't this, major shift in the market, what's going on is people are used to having their houses get multiple offers that first, 3 or 4 days on the market. If it, shows well and is priced correctly, they're used to getting multiple offers and in a bidding war, and now they're not getting that. And I think what's going on from some of the listing agents I've talked to, from just different agents I've talked with, is that everyone's just kind of in this, oh my gosh, what's going on? So it's a little bit of this shock moment where some sellers are panicking, like, oh my gosh, I just need to get rid of this property. And we've actually gotten a couple really good price reductions or easier inspection objection resolutions with some buyers that we've been working with. So it's actually, from the data and just from us being boots on the ground, it's a really good time to go out there and be a buyer. And I have no qualms for you sellers out there because it's been some great times the last few years. And historically, it's still a great time to be a seller. I think people are just kind of in this little bit of like, oh my gosh, what's going on? And we as buyers are able to go out there and get, it's a good time, and we're able to actually get return phone calls from listing agents. But on a more serious note, we're actually seeing some really good negotiation tactics as well as we're out there getting properties under contract. So this next slide we're looking at is comparing the population growth of Denver Metro to the total number of inventory of homes around Denver Metro. So if you're seeing this graph, there is a lot going on at the moment. So I'm going to walk you from the left side of the graph over to the right side of the graph. So the left side of the graph actually shows the inventory of homes in Denver Metro. So back in the mid-'80s, we were around 20,000 homes. Then you come into the 90s, which is a seller's market, and it bounced between like 10,000 to 13,000 homes. And then you go up to the crash 10 years ago, and it was close to 30,000 homes on the market. And then recently, the last couple of years, it's been averaging around 5,000 homes on the market. And so the average has been just over 15,000 homes of inventory. And that's what we would, best guess consider, hey, a balanced market. But the interesting thing is the population growth of Denver has really had no impact on the inventory of homes. And as I said earlier, on the total number of sold homes. So if you look from 1975, the population of Denver Metro was about 1.5 million. Now in 2018, we're at like 3.2 or 3.3 million population in Denver Metro. So it's doubled since the 70s. So over the last, 30 years? Actually, I guess that's 40 years. I got to do my math right. That's over the last 40 years, we've doubled the population in Denver Metro and then a little bit more as well. And this third part of the graph actually shows the inventory of active homes per 1,000 people living in the Denver Metro. So if we go back to that 90s sellers market that I've been referencing, we had about 5 homes per 1,000 people. And then the recession, a decade ago, we had about 10 homes per 1,000 people. And then this recent sellers market the last couple of years, we've had 1.5 homes per 1,000 people. And if you were to average everything out since the 80s, it's averages out to be about 6.7 homes per 1,000 people. So I'm sharing this with you because I found it really interesting that population, there is no direct correlation to inventory levels. But also to show you that, we've got a 35% increase in active homes from this October to the previous October, and days on market are up, 10 or 11 or 12%. But when you actually take a step back and look at it, you know what, in the grand scheme of things, in the big picture, it's really not that big of a difference. So the next slide is titled, Do Increasing Interest Rates Result in a Smaller Number of Homes Sold? So this is, I think, a scatter plot chart would be the official term that actually shows the number of homes sold relative to the population and comparing it to the average mortgage interest rate. So without trying to describe all this data over audio, in a nutshell, if you exclude when mortgage rates are over 10%, so we're talking over double-digit interest rates, there is no relationship between home sales volume in Denver and interest rates. And to really drive that point home, in 1978, when mortgage rates were just under 10%, there's actually more homes sold than in 2013, when interest rates were at around 4%. So, my best guess, and this is just, again, my best guess is that for a lot of people who have not been around, for first-time home buyers or first-time investors, maybe they see that jump in interest rates from last year. They're just like, oh my gosh, interest rates have gone up so much. Perhaps it scared them. I've heard a lot of people make comments about that or speculate about that. And I could say, you know what? I can definitely believe that. But this chart shows the historical interest rate of a 30-year fixed mortgage and then compares it to the last couple years. So even though interest rates have gone up this last year, we are still at incredibly historic lows for interest rates, because right now we're in the high 4s, maybe about 5% for an owner-occupant interest rate, 3/4 of a point higher for investment interest rate. But if you go back to before the crash, interest rates were 5, 7, 9%. And that's what a lot of people are used to, or even sometimes you go back to the 80s, we were talking double-digit interest rates. So perhaps some first-time investors and home buyers have gotten a little skittish from the interest rate. But if you're a first-time investor or first-time home buyer and you've gotten freaked out about the interest rates, I would really take some time and come back and look at this chart, or go spend an hour on Google and look at historic interest rates, because even though they've crept up this last year, we are still at historic lows when you look at the last 30 or 40 years. So if you're out there buying and you're a little bit skittish about it, do some research and get the big picture as to what's been going on with interest rates. Now, this chart that we're looking at actually shows when houses sold at a discount, so lower than asking price or listing price, and then when houses actually sold more at a premium when we compare the actual sales price to listing price. Now, going back to the crash, a lot of the homes sold at a discount. So 60-70% of homes sold at a discount. And then it slowly just kind of started working its way down over the last couple of years. And if you can actually see this chart since about 2015 to 2018, you'll actually see two things here. The blue dot line actually shows you what homes sold at a discount. The green solid line shows what homes sold at a premium. And what you always see is that the premium, the houses that sell for a premium, they spike around the second quarter of each year. Well, that coincides with the springtime, which is always the hottest time in Denver. So we've got the most houses selling for a premium then, and the fewest houses selling for a discount then. And then as you move into the fourth quarter, which we're at now, and you take into, this is a seasonality aspect of things, well, then they flip-flop where more homes sold for a discount. The homes sold for a discount peak now, and the homes sold for a premium are at a trough. They're at their lowest point. And it's actually just been very consistent like clockwork for the last few years. So this is another sign that, yeah, this might just be a seasonality thing that's going on, or at least it should be a seasonality thing going on. And it's more confirmation that if you're a buyer, this is a great time to buy. And that if you're a seller, well, then you need to price your house accurately to get people in the door and putting in offers, or perhaps you may want to hold off until next year to list the house. Now, of course, if you're a fix and flipper and you got a hard money loan on there, and you've got to take into account those, 3 more months of carrying cost and, 10-12% interest rate. So you have to kind of do the math on there. But regardless, if you're a buyer, more reason to go out there and look at things. If you're a seller, more reason to go out there and make sure you have your house priced appropriately. So I want to end with this slide, and this is a slide that Lonnie Glessner put together fairly recently. And Lonnie is a local lender here in Denver, and he loves his data. He's been a guest on our podcast a couple of times. He's the guest that we spent an hour and a half talking a couple months about is Denver in a bubble? And so this is just a great summary chart of comparing some 2002 to 2006 stats to 2012 to 2016 stats to kind of give you a big picture glimpse as to what happened back then to what's happened recently in the market. So I'm going to read these stats. So the average months of inventory back then in a 2002 to 2006 time frame was about 6.1 months of inventory. 2012 to 2016, it's been 1.8 months of inventory. Back then, we had 93,000 new homes built over those 5 years. Recently, it's been about 30,000 homes built. Back then, we were 85,000 job growth. Now we're at 180,000 job growth. The net migration in Denver, 24,000 people. And then recently, it's been 190,000 people. And so if you divide the homes built divided by the net migration, we went from 3.9 homes per person to 0.2 homes per person, so less than 1 home per person. So back then, you know what? It was too much supply and not enough demand, along with really, really loose lending guidelines. And then recently, it's just been not much supply, so scarce inventory, with lots of demand, so that's driven up prices. And we still have, really, really tight lending guidelines compared to what we did before the bubble. So it's a great snapshot to show you that, yeah, even if the market is adjusting some, and perhaps this is seasonality with the election and some short-term interest rate shock, and then things are back to business in the spring, or, who knows what's going on. The reason I'm showing this data is because I want to show you that in the big picture of things, we still have a long way to go to get out of the seller's market. So good news, bad news, depending on where you are with your portfolio and what you're doing. But I'll end with this. I have no idea what's going on, but I can tell you from the data I've seen and from getting some properties under contract, putting offers in there, this is a really good time to be a buyer. So if you're working with me and Charles and Preston, hey, reach out to us, or if you've talked to us in the past, reach out to us. We can go out there and get a better deal than usual, and this is all relatively speaking. Now, if you're working with another agent, go out with your agent and go out there and hunt some property. This is a great time to go buy your first house hack, your next house hack, or to go out there and buy a rental property. Now, if you're on the selling side, I've already said this, make sure you're pricing your house appropriately. All right, guys, so this wraps up the market trends here. If you got additional questions, if you want to see these slides, if you can go out there and look at properties or talk market data, reach out to me, Chris at denverinvestmentrealestate.com, or give me a phone call, 303-548-0846. I'll be more than happy to give you the slides or talk data with you. All right, thank you so much.